Let's call this meeting to order, please, and stand for the pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Barnes, will you call the roll, please?
Yes, I will.
Thank you.
Oh, let's see. Aldency. Here. Bender.
Here.
Sellers.
Here.
Martin. And Mr. Sellers.
Here.
Okay, everybody's here but Mickey Martin.
I need a motion to accept the minutes. And then we can have discussion if need be. The minutes are from July 15th, 2013.
Does anybody make a motion?
I make a motion that we accept the minutes
As presented.
as presented. I'm sorry.
Anybody second?
Need a second?
Second.
Good. Motion by Sellers, second by Aldenson. All in favor?
All in favor? Aye.
Aye. Any opposed? No. All right. Okay. I know. Give everybody a chance to go minutes. Okay. Okay, we're now going to have the report by the auditors from Whitford. Got some chairs. Yeah, some chairs like that. This okay?
Yeah.
Yes.
this one. And Greg, who do you have with you?
This is Chris Garnhart.
Okay. C or K? Okay.
I thought you were talking about Garnhart. G.
All right.
Thank you. My name, for those who don't know, I'm Greg Dunn. I'm the partner in charge of the Freeport Township audit for this past year. This is Chris Garnhart. She's the in charge on the audit for this past year. Should have two reports. One is bound, that is your annual financial report. The other report is unbound, and that is the communications for the statement on auditing standard 2014-1. We'll go over that a little bit later. The first item I want to go over is our opinion on the audited financial statements. That would be the first unnumbered page after the table of contents. A little bit different format. It says about the same things it has in the past, but it's a different format this year. There's some new auditing standards.
You're talking about the one in the bound,
In the bound.
right?
The bound.
I'm sorry, the bound one, I'm sorry,
Oh.
it's the large one.
What page?
First page, right there, you got it right there. Basically explains the financial statements that we audited, the governmental activities, each major fund, and the remaining fund information for the township as of for the year ended April 30, 2013, and the related notes of the financial statements. Those collectively comprise the township's basic financial statements, and then they're detailed in the footnotes. Management's responsibility is management is responsible for the preparation and fair presentation of those financial statements in accordance with accounting principles generally accepted in the U.S. of A. That includes the design, implementation, and maintenance of internal controls relevant to the preparation and presentation of financial statements that are free from material misstatement, whether due to fraud or error. Our responsibility is to express opinions on those financial statements based on our audit evidence. Now, the standards that we used are generally accepted auditing standards issued by the American Institute of CPAs. Those standards require we plan and perform the audit to obtain reasonable assurance. What reasonable assurance basically means is we don't look at every single transaction. That's not efficient, you never get rid of us, and it's cost prohibitive. We are required, though, to gain enough evidence to be able to support our opinion on the financial statements. And involves performing procedures to obtain audit evidence about the amounts and your disclosures in those financial statements. Now, we assist in the preparation of those financial statements, but they're management's representation, so management does review those. Must take responsibility for those financial statements. We also are required to, the procedures that are selected depends on the auditor's judgment, including the assessment of the risks involved. In making those risks, the auditor considers internal controls only to the extent of planning her procedures. We don't do such a detailed internal control review that we can issue an opinion. That's not the purpose of that. But strictly in order to design those procedures. Accordingly, you express no opinion on the internal control. Audit includes evaluating the appropriateness of any accounting policies used, estimates, significant accounting estimates that are made, as well as the overall presentation of the financial statements. And to summarize that section, we believe that our audit evidence we obtain is sufficient and appropriate to provide a basis for our audit opinions. And our opinion is that the financial statements referred to above do present fairly in all material respects the financial position of the governmental activities, each major fund, and the remaining, the aggregate remaining fund information of the township as of April 30th, 2013, and the respective changes in its financial position for the year then ended, in accordance with accounting principles generally accepted in the U.S. The other section of the report, accounting principles, has certain information that's required. I'll refer to GASB, it's Governmental Accounting Standards Board, so sometimes I throw that out and don't realize not everybody understands what GASB is, but that's the standard setting body for governmental entities for accounting principles in the United States. And they require information to be supplementary and be associated with the financial statements, even though they're not part, and that's referred to as required supplementary information. And in your report, the required supplementary information that applies to your financial statements are certain IMRF disclosure, that's trend information with respect to IMRF, as well as budget to actual comparisons for the major governmental funds. That information we're required to review, we submit it to questions, make sure that it's appropriate in overall presentation, but we do not express an opinion on that part of the information. And then the other supplementary information on pages 44 through 46 are provided for additional analysis. That we did subject to the audit procedures that we use for basic financial statements, and that information is fairly presented in all material respects. Management's discussion and analysis is what follows. This is actually required supplementary information again, but this is a synopsis of the financial information. It's more like an executive summary. Probably some of the, and it's a chance for the government to highlight certain items, explain it. Pages 7 and 8 gives a very, very condensed comparison between the government-wide statements between the 2 years, 2013 and 12. And again, it's very condensed so that it has your major categories of current assets, capital assets, net of depreciation. So total assets at $2.186 million this year compared to $2,302,000 last year. Liabilities of $1,055,000 versus $1,015,000. And I'll talk a little bit about those categories of liabilities. There's a new accounting principle that's coming out that's going to change, could be effective for next year. Changes the terminology of what a liability is versus, and basically what that is, the current assets, it's an accrual of the the 2012 tax levy that you don't receive until after the end of the year. But it also shows up as deferred revenue, which right now gets categorized in liabilities. They offset each other. So it looks like we've got huge liabilities and huge assets when in fact they really offset each other. So the terminology is going to change next year to deferred inflows of resources and deferred outflows of resources instead of liabilities and assets, since they effectively don't meet the definition of an asset or liability before. On page 8, again, it's the government-wide. Again, just so I understand, government-wide is where we take your fund statements, roll them up, and actually present them more on a business-type situation. Our fund accounting statements, we expense capital assets, we expense any capital, any debt payments that are made. On the government-wide financial statements, we actually roll those up and show those as capital assets. The debt gets shown on that statement as well. So on our net position this year, it actually decreased by $155.78. And also, in terms of that, capital assets are picked up, and then depreciation is actually recorded for the government-wide statements. On our day-to-day fund accounting, regular operations, there is no depreciation. And as I said, we expense those items that are typically shown just strictly as a balance sheet type entity. The government-wide statements begin on page 11. And typically, if we had business operations or business-type operations like a city and municipality would in terms of like a water and sewer fund, enterprise-type fund, there would be business activities on here. But since we don't have any, all we have are government activities. But as you can see in the total current assets, you see there's a property tax receivable of $999,642. That's really the 2012 levy that we aren't going to receive, and it's being used for next year to fund next year's budget and operations. So that's why down under liabilities it's shown as deferred revenue. So next year, actually the statement will change a little bit, and it'll say assets deferred, outflows, and then down here will be deferred inflow of resources as well. So there'll be some new categories in that as well. The net position, that's a little change this year too that affected your statement. It used to be called net assets in the past. I think in prior years it may have been called net equity, but it was Governmental Accounting Standards Statement number 63 came out. It's all part of this overall change on defining what are revenues, assets, liabilities, that type of thing. So again, that'll be effective for the next fiscal year. But the net position is this year. And the net position is basically 3 categories. Invested in capital assets, net of any related debt. Those that are restricted, and when we say restricted, they're restricted usually by third parties or enabling legislation. Most of this is your special tax levy information. Tax levies that have to be spent for a specific purpose. Then everything else is considered unrestricted at that point. Page 12 is a statement of activities, shown in a little bit different format than what we normally see, but it starts out with the expenses for our functions, which is basically general government and welfare. Any capital grants, contributions, reduce that, so we see what our net costs or expenses are with respect to that. And then down below, we take in our general revenues. These are defined as general revenues. Property taxes, $960,000, other taxes of $50,000. Gain, loss, and disposal of assets, so that we get down to our change in net position of $156,578 decrease this year. Those numbers are right. The next page is the balance sheet for your governmental funds, and again, the only governmental funds that are shown are those that meet the definition of a major governmental fund. That can change from year to year. Typically, they're close to the same. A general fund or the town fund is always considered a major fund, just by definition. It's always major. And general assistance is a special revenue fund. We had a capital projects fund, which was depleted all but for a small amount. And that amount, based on the information that was done at the town board meeting, it was no longer committed or assigned. So that actually was shown just for reporting purposes as part of the general fund this year. And we'll see how that was combined. Other governmental funds are really then those that don't meet the definition of a major governmental fund, and those are combined, and we can see those, we'll see those in the back when we get to that point. Page 14 is a reconciliation then between that government-wide statement of net position and your government funds financial statements. And showing that the basic differences are the capital assets and long-term liabilities that affect. And that long-term liability at this point is the IMRF pension obligation. Again, a change in accounting principles. It said if you're using the accrual basis, which we do, again, this is not affecting the fund statements at all. This is strictly for the government-wide statements. The governments in Illinois were allowed, not all of them, but some, I think we had some choices, were allowed to use a smaller rate for funding our IMRF in the past few years. It was to give a break to some of the governments because they're all having problems. And the Government Accounting Standards Board says that that's fine, but if you don't fund it up to the point that, from an accounting standpoint, you did what, you funded it according to what IMRF told you to do. But accounting standards don't necessarily agree with IMRF funding standards. So the difference is an accounting issue. And again, the difference between what the accounting standards said we should have funded and what we actually funded according to IMRF, we were short about $19,000 just for that 1 year. It's not the entire accrued liability that hasn't been funded, but just for that 1 year, and that'll go up again. There's be a new accounting standard in the future that's going to require governments that are on an accrual basis for their government-wide statements to record not just the shortage each year, but the entire unfunded accrued liability to be shown as a liability in the front of the financial statements. And not to get too much into it, because that's not going to be effective for a while, for a few more years. But I just wanted to show you the amount. If you turn to page 26, page 26 down at the bottom, or on this page, on page 26, shows the calculation of that net pension obligation. To come to the 19,223. The actual unfunded accrued liability that is going to be required in the future is on page 31. Page 41, if you look at the 1, 2, 3, 4th column over. What did I say? Did I say something other than
31. but
31.
that's okay. 31 or
31.
41? It is
31, excuse
It
me.
was 31, okay.
If you look at the 4th column over, it's the unfunded AAL, that's the unfunded actuarial accrued liability. That right now, the only place that gets shown is just in the back of the financial statements here as supplementary information in downstated IMRF. But once GASB 68 comes into play, I don't think it's until fiscal year is ending after June 15, 2015, so I don't think it'll affect you until maybe 3 or 4 years. The entire $540,000 would be shown as a liability on the front of the financial statement, in that government-wide financial statements, instead of just the $19,000. that'll be the change that's required. There are quite a few articles around about these significant changes in the reporting that's going to have the effect on a lot of governments, because right now that entire liability is not being shown anywhere except maybe buried in the footnotes. And I don't think a lot of government, and that was why they made the change, just to try to change how it's shown to the public, essentially, and what the potential liabilities are out there. And it's one of the reasons why, obviously, it's one of the reasons why our state's going through a lot of the changes in the rigmarole downstate as well. So it isn't just IMRF, it's a lot of states and a lot of different places. So that'll be a change in a few years. The page, back to page 15, that is the statement of revenues, expenditures, and changes in fund balances again for your major governmental funds. And again, this statement and the statement that was on page 13, those are prepared on a modified accrual basis. Your day-to-day operations are actually on a cash basis. These are just converted at the end of the year. We can see the various changes in the only significant item on there, not really significant, but the difference was the reclassification of the balance of the capital projects fund. That was $51,000 that was not committed. It was not committed or assigned or restricted during the year, so that amount was shown as part of the general fund just for reporting purposes. And it's strictly an accounting and reporting issue. It's not statutory or anything. And page 16 is a reconciliation between that statement on page 15 and that statement of activities for the above. So it goes from the governmental accounting part of it down to the change in net position of the government activities. The footnotes follow on pages 17 through 30. These are further extensions of the financial statements explaining various matters. Footnote 1 is where all your significant accounting policies are listed, and this describes the financial statements and the accounting methods that are used in preparing the financial statements. That's something that is important to know where to go find that. Explains further in there kind of what our property tax calendar is, although everybody pretty much aware of that. Further, just most of these are required disclosures by GASB as far as what they are. Again, we talked a little bit about the pension plan, the IMRF's status on that. Let's see. We talked about some of the pending GASB statements. The statement that will go into effect next year is the one that changes some of the terminology of those accounts that are shown in the government-wide statements. I'm sorry, I'm on page 29. The one statement, the one item that we did implement this year was GASB 63, and that just basically changed the title of the statement from net assets to net position. A lot of these other ones that are coming into play probably won't affect the township. Let's see, the rest of the statement, again, I think it's historical in nature. We turn back to page 45. And this isn't a required statement, but I think it's important as temporary information, or supplementary information, to know what gets combined into the non-major governmental funds, and the funds that didn't meet that definition. In this case, it was IMRF, like insurance and audit fund, and shows what the balances were in those funds at the end of the year. And then on page 46 shows the changes in those fund balances, the revenues and expenditures for those funds for that year. And it shows what gets amalgamated to come up with that one item in the front of the report. Any questions on those statements?
Greg, you referred to how the increase, we're going to have to show the total pension liability in the future. Will it, if and when the township would ever have to look for borrowing funds for any project, would that have an adverse effect on the interest rate that the township would have to pay in order to secure funding?
That's a good question.
I would say that the village that went out to sell bonds recently, and they did look at their IMRF obligation for the rating on the bonds. Standards and Poor's rating that they were.
I think a lot of these bonding agencies, what they're doing is if it's not part of the report, they understand that it's not. They're going out and getting that information and bringing it in to facilitate that. I think it's only going to affect the interest rate or the ability to, on bond issue or debt, if it affects the ability of the township to repay that debt. And again, from a standpoint of the government-wide statements, that's the only place it really shows up. But if we, again, if we go back and we consider that the statement of net position on page 11 shows $1,130,000 of net position. So we had a liability of $530,000 on there, even though, it's an accounting entry. That would bring that down to $500,000.
And a large portion of the IMRF liability has been paid already into the IMRF. It's not actually the money they'd have to come up with. Is that an estimate how much they would have to come up with if I remember liquidated right now?
Well, actually the parts of the formula that's being showed to come up on that one page we showed with a $500,000, that's going to change a little bit. And it's actually going to decrease some of the things that makes it look like it's not going to be so bad. So actually the liability would probably be higher from that standpoint. But no, I was looking at, I believe what the concept says is that they're looking at, I know I was looking at the State University retired system today, and they're talking about being 90%, I think, going to be 90% funded by the year 2045. So it's longer than I'm going to be around, but that's the ultimate goal, is to have those 90% funded, I think, at that point. So no, it doesn't represent money that you have to come up with right away, but it just shows the key thing there is to show that that is an actuarially calculated liability that's really an obligation of the government entity that currently isn't showing up anywhere. The other report that you have is unbound. This is required information that to those charged with governance, which is the board. Again, reiterates what our responsibilities are under generally accepted auditing standards, and is to express an opinion on whether the financial statements are fairly presented and in all material respects, and also whether they're in conformity with government accounting principles. And again, we just talked a bit about, as our part of our audit, we considered the internal control, but strictly for the purpose of designing our audit procedures, not to provide assurance. Other information contained in the audit documents that had to do with the RSI, the required supplementary information, the back of the report is supplementary. And what what we did relative to that. And then on the next page, it talks about the other supplementary information, our responsibility with that. The plan, scope, and timing of the audit was performed in accordance with our engagement letter that was dated March 14th. Qualitative aspects, there was a change in accounting principle this year, again, GASB 63, but the only change it did was change terminology on the financial statements. It didn't change anything with regards to measurement or presentation of dollar amounts. Also talks about estimates, that sometimes we don't have actual data, but management has to use reasonable estimates in preparing those financial statements. And sometimes the actual results may change on those. The disclosures in the statements are neutral, consistent, and clear. We encountered no significant difficulties in dealing with management, performing or completing our audit. I talked about corrected and uncorrected misstatements. That's a kind of a dark auditor's term for adjusting entries with respect to that. Audit adjustments, cash-based adjustments, reclassifying journal entries, report the entries, and primarily those were to switch from cash basis to accrual basis. And then any adjusting entries we had actually are included as part of that, of this report, so the board can look at those. There were no significant disagreements with management, especially with respect to accounting and auditing matters or disclosures in the financial statements. We did request and receive management representations with respect to the audit. Again, a copy of the representations is included with this letter. To our knowledge, management did not consult with any other accounting or auditing firm with regards to disclosures or application of accounting principles. And we discussed usually a variety of matters throughout the year, but usually those related strictly to accounting matters, application of accounting principles. Internal control matters, and again, in planning it, again, we talk about looking at your internal controls only with respect to planning our audit procedures. They're required by auditing standards to communicate to you whether or not there are any significant control deficiencies or material weaknesses. We do have a couple comments that we felt are significant deficiencies, or at least important enough to that point. Again, preparation of the financial report. We prepare that, management reviews it, management takes responsibility. However, it still is important for the township to try to take responsibility for making sure that there are disclosures. And that all the disclosures there in the financial statements are complete. The other condition, segregation of duties, I think we've got pretty good controls, especially with some oversight now, with maybe some other folks helping out. But there are times where we just don't have total segregation of duties. I don't think that it's cost effective sometimes to have complete segregation of duties, but as long as we have oversight, the board's getting the reports that they need to see what is going on. And particularly, like one of those important reports is budget to actual reports. And if I was on a board, I'd require that information. Bank reconciliation. The one item we kind of ran into was that the bank reconciliation is probably one of the most important internal controls you can do. It's a basic accounting 101 internal control. And what we found out was a good part of and they need to be done timely on a monthly basis. And what we found was that I think what happened was the staff got stuck on one month and just never got back to getting done. So once they kind of figured out what that was, they were able to crank them out. But if you do a year's worth at a time, you kind of lose the whole purpose of a monthly bank reconciliation, and that's to reconcile it to the financial, to your general ledger. And if there's differences, you know, you look for them, find out why. So, fortunately, didn't appear to be anything significant that was the issue, but I believe those, we talked to management about that, and my understanding is those are being done now on a timely basis. The other item we found was the township personnel policy for payday states all employees are paid bi-weekly on every other Friday. I think this was an issue in the past. We did some special work with regards to payrolls and payroll issues, and I believe this was done at the beginning of the fiscal year, right? It was right at the end of last year.
Right.
On the timing of that, so
May.
it was at the end of the prior fiscal year, at the very, very beginning of this fiscal year. We saw an instance where a check was dated one day, which was the payroll date, but it cleared the bank the day before. And so it was strictly a timing issue, but that was the only one we saw. So I think that was at the end of that prior year. And I guess the banks don't always pay attention to what the dates on checks are. So anyway, we just wanted to re-emphasize consistent application of payroll policies is important. The only other management item or management issue that we had was during our inquiries and questions, item came up as to the appropriateness or the payment that was paid for reimbursement of medical benefit deficit. When we got asked for the backup on that, it came to our attention that it was strictly a difference between cost of the township's premium versus what was paid personally. This is an issue that it kind of speaks to a broader issue, and that's how are you going to handle any employee that possibly is over the age of 65 and on Medicare. The only reason I say that is I haven't necessarily had the problem come up in any other governmental units, but I've got the issues coming up on commercial clients that we've got, business clients, where there's a lot more 65-year-olds and employers saying, or in some cases the insurance companies saying, once you're 65, you're off of the group policy and you got to go on Medicare. When fairness and providing benefits, how do you handle it? And they're working full-time. So it's an issue that needs to be addressed just from the policy, but the policy probably needs to be either redone or eliminated. I don't know if this particular ordinance is probably still in effect, but it said, and the ordinance says is that they're going to provide like benefits, but there's no example on how that would be calculated or what it should be based on. Our interpretation is it shouldn't be based just on the cost of premium, because I don't think that's relevant from the standpoint of reimbursement. I believe that, and we see this in other clients where we say, well, for whatever reason, they're not on that particular policy, but they say we're going to provide equivalent benefits. That's fine. Now, to me, that means, you know, if we look at what the standard is that it's based on, it says, well, if you do this, you know, if the cost of the premium is, say, $6,000 a year, and the employee has to pay a third, so they've got $2,000 out of pocket for that if they're on the township policy. And then they pay 80/20 after you do your deductible, and then figure what your out-of-pocket costs are. And then if you're on a different policy, look to see what doing those particular procedures would pay under both, and look to see if there really is a difference. But I think the reimbursement needs to be based upon actual health reimbursement costs rather than just the cost of the policy. You know, as an employer, if I've got one employee that says, for whatever reason, it says, I'll provide you a like benefit and reimburse you for the cost of the, or however it's done, but if my cost is only $500 doing it that way, and it's the same benefit of what normally costs $2,000, that difference shouldn't go to the employee as far as I'm concerned, so. And it may be, but, you know, what that's going to involve is, you know, employee has to bring in cost, you know, actual medical expenses in order to do the comparison, et cetera, so. Anyway, I think our thoughts are, you know, we need to revisit that. Is that something we want to continue? It was in an ordinance, so I think the only way we can get rid of it is unordinance it with another ordinance. And I don't know what the likelihood of 65-year-olds still being employed full-time, but you can't discriminate them if they're full-time employees, so. So it's policy that probably needs really significant, seriously needs to be reviewed, and if you're going to have that policy, typically the ones I've seen that are most effective is they lay out an example based on what the actual costs are. So there's no question on how it's calculated. Other than that, that was all we had in terms of what we came through in our auditing procedures this year.
Any questions?
Supervisor Summers? Thanks, Greg. My only, I had an opportunity to look at it earlier, so my questions pretty much have been answered. I appreciate your clarification of the ordinance. And on May 6th, in fact, I had presented that question to the attorney for the township and to Supervisor Hooper, who was receiving that reimbursement. I have a question for Chris. When you went for the paper backup, did you see anything more than a sheet of paper that had a dollar amount, or did she give you a spreadsheet?
I would say it was several pages, but I'm trying to think.
There was a
where-
number of pages. I think I'd actually called Sheila and asked her if she had any backup for that, and she sent me something, but it's pretty much the same thing, what they had.
What
So
they
it's
had.
It was several pages of
Okay,
information.
because.
That's how she calculated it.
Right, but when actually put into a spreadsheet, and I had given it to the trustees at the time, just using her own, because she was looking for reimbursement of equal, mine's 700, hers is 500, she wanted the $200 difference, when in fact, I'm paying a larger portion, and she didn't compute that into that number. I was able to get to her number, but in fact, she wasn't taking into consideration that the rest of us were paying a higher portion towards our insurance, and she was actually paying less. So, all in all, I basically came up with another number, but my question, was it truly legal? I believe the ordinance reads equal benefits. It does not imply equal benefits in dollar amount. She had the same coverage as the rest of us. The difference is that she also had Medicare as her supplement, or her primary, and Blue Cross was her supplement. Am I correct?
Could be. I guess all I'm saying is whether it's supervisor or another employee, you know, that's why the policy needs to be reviewed. And then it creates other issues. You know, at this point aside, and we're running into this with our commercial clients, so it'd technically the same now. We get into some IRS issues as far as reporting now. IRS, that's a whole different, I mean, that's a different ballgame. They don't dictate statutes and local ordinances and that. It's strictly on how things get reported. But we have a pretty good-sized benefits division in our firm, and so I think we asked them specifically. And the reason I was asking had nothing to do with the township, although it relates, was I've got another commercial enterprise where I've got 6 or 7 individuals who are over the age of 65, and so this inducement to get them off the policy, because that brings down the premiums for everybody on the experience side of it. They said, well, we'll reimburse you a couple $100 a month for the Medicare premiums, or we'll reimburse you your Medicare premiums. Generally, the IRS says that you can provide tax-free health benefits pretty much for employees, except reimbursing Medicare premiums. So whether it's this issue or anything else, you can reimburse them, but it's a reportable tax issue for the IRS.
When it's a government
When it's a government.
program.
So when we reimbursed her, which we did in advance, 3 months at a time for Medicare,
For premiums.
for premiums.
Technically, that should be reported on a W-2 or 1099 or something.
Changed her salary. Thank you very much. Okay.
Well, you gotta remember, IRS reporting does not dictate an attempt or local ordinance what a statute is. That's strictly reporting federal statutes. But again, it's employee benefits. It's a very simple ordinance, but it leaves a lot of questions on how it's being interpreted, so, or calculated for that matter. And again, one of the reasons I'm saying it's probably a broader issue is because I'm having those same issues show up in, I've probably got 3 commercial clients where we're trying to explain to the employees why they gotta show this on their W-2s where they didn't have to in the past.
Any more questions?
Thank you for your time, appreciate it very much.
I don't think so. Okay. We need a motion to receive and place on file. Place the audit on file. So moved.
Who was that, Bender?
Yes.
Who seconded it?
Second.
Motion by Bender, second by Sellers.
Okay.
Vote? Probably not.
You want to do a voice vote?
Do a voice vote, yeah. All in favor?
Aye.
Anyone opposed? No. So, all right. We'll now move on to the approval of claims and demands. I need a motion to approve the claims and demands before we can have discussion. Anybody?
I make a motion that we approve the claims and demands.
Second. Who seconded it, Bender?
Motion by Sellers, second by Bender. All right, let's go through.
Did you explain you get the new ones?
Yes, yes. Did I give you a new copy of the claims and demands? I entered claims and demands this time for my first time, so if there are any.
It was on.
No, this is a different one.
Oh, okay.
So yeah, I did it my first time, so.
I have some questions.
Yes, ma'am.
I thought when we first talked about going out of town to meetings and such, that we would all go together in one car and save gas money, and I see that didn't happen this time.
No, it didn't.
I think if people choose not to go in the original car, they should not be paid. I mean, if I go to Rockford and I decide I want to stay and shop, then I'm going on my own time.
Okay.
I'm not going on Township's time. And I don't think we should be paying just because somebody wants to drive by themselves. I think we all should go together. We're talking about saving money, so that's money that could be saved.
And I agree with you, Nikki, but I do know that Kathy did say that even when it came up that she needed to, she had to leave and go to Chicago that same day. So, I mean, I guess I could understand it if it's something important, but if I just said, well, I'm staying over because I'm
Right.
gonna do such, that, I can understand it, but if it's something, that'd be crazy for her to come all the way back to Freeport, get her car, and then go all the way back.
Traffic.
And she did mention that. Now, the other one, I don't know what that reason, but I do know that Kathy did say that way in advance.
Okay,
Well,
well, it's just
yeah.
something we need to look
Yeah.
at. Also then on page 4, is DMH Properties. It looks like maybe 2 different clients, but I think something that you need to start looking at is when there's 3 or 4 payments to one of these properties, are they a rooming house and are they licensed?
Okay.
We found that with the fire that was last week, and there were 4 people renting in that house, and you were just ready to pay one of them. I had the gentleman in today who said he was on Township, but you hadn't paid the first month's rent yet. And it's a 2-bedroom house,
Okay.
and 6 people living there.
Yeah.
So I think when we see all these in one thing, we should start looking at it.
Okay.
Plus, can they not bring it to the attention of the city?
Mm-hmm.
Because
Right.
there's special
Mhm.
qualifications
yeah.
and zoning that would be required for it to be a rooming house.
Right,
Others have to follow by that.
exactly, yeah.
And I think we had talked a little bit about that when we were saying, 3, 4, and 5 clients in one house.
Right.
How many bedrooms are these homes that these people are living in?
Yeah.
Okay.
And people sleeping on the couches, and
Mm-hmm.
that's not rent for an apartment.
And then on page 5, under Housing Authority, there's a late fee payment
Yes.
on 908. Is that something we have to pay
Where is
for
that
them
one?
just because they did not pay their rent on time?
I had a real problem paying
Have a
that
problem
one.
with that,
I have a
yeah.
real problem with that. But I know at housing, if they don't pay those late fees, they will kick them out. And then they'll end up getting an apartment somewhere, and then we're paying $275 as opposed to $17 or $18. Now, that's something I need to talk with Mr. Williams about, because I don't like paying late fees, and I don't like paying to get people's commodes unclogged.
Exactly, I saw
Yeah,
that too.
that's on there too.
Yeah, I saw that.
So that's something that I have to work out with Mr. Williams at Housing Authority, because I don't like doing that, and I'm glad.
We made a payment to get somebody's.
Yes.
That's not a part of Housing Authority, that's a part of their property.
Well,
I guess.
what they had on the bill was it was after hours. They had to call someone in after hours to come and unclog still. And the maintenance fee was someone locked themselves out of their apartment, so they had to come after hours to unlock the door to let them in.
We've paid for that before now.
Yes, we have,
But-
yeah, and that's ridiculous.
It is. So
They better become,
That makes no, that's a
not-
housing problem, not
Right.
a township problem.
right.
Let them work it out.
Yeah.
So, can you ever recall when we had to pay late fees?
Mm-hmm,
Okay,
yeah,
because I don't remember
yeah,
ever
yeah,
having to
they
pay.
paid late fees, yeah. Yeah.
So that's the
we used to have
conversation I
fees,
need
we
to
had
have
paper
with-
keys,
Oh, yeah,
With
yeah,
Mayor.
I remember
everything,
that.
yeah, they
Yeah,
lose
can't
those.
come here.
Then on page 8, Stevenson County Treasurer, and I know you said that you can pay real estate taxes. This is I don't know if this is the same one that we paid before, but is this maybe a person who was entitled to $275 and this $79 came out of that? Or did they get their $275 plus?
No.
This $79 came out of the
Mhm.
$275?
And I will double check to make sure that, but I don't. This not over the top of the 275. No.
Then one more question, should
Yes,
I
ma'am.
abstain from voting on the payment to the Salvation Army for $190? Since I wrote the voucher.
You're employed by them?
Mhm.
Yes, I would abstain.
Okay.
questions?
Is that payment of $190
Yes.
that she's
Yeah.
abstaining
Mhm.
from?
I have a question on page 9.
Mhm.
It's the fourth one down for the water and sewer. Is that maybe part of that is a deposit for 165?
Where we at?
Where is that? Oh, yeah, 'cause that's a lot of
That is a
water
lot.
bill.
Oh, that could, no, that's not big, no.
Huh?
No, there's a lot of them.
No, but it could be leaks.
Leaks
Mhm.
and that, they just leave it leak.
Yeah, but that's
I
where
don't think that's a deposit.
people have to be accountable for certain things.
Well, and
You
if
know it's
sit
leaking
back-
and you don't.
Yeah, if you
Yeah.
sit back and say, oh yeah, I can hear my toilet run,
Right.
Right.
then you call somebody about it.
So that's one that we can find out.
I see the gas cards are low. $650 in gas cards. Were they just still, I mean, school, school's not in, is it?
Mm-mm.
So are these like for jobs or, do you know what the gas vouchers are for? Since school is out?
It's for CWP, Community Work and Training.
Huh?
It's for CWP, it's under Community Work and Training.
Oh, okay.
Yeah, 'cause I don't think Highland starts classes.
No, till the 19th, yeah.
Now, do you have them bring their receipts in? Because
Far
that used
as
to be done for the
the,
gas cards.
no, what happens is, Mobile sends us a whole list of these cards that are used. So people don't bring their personal receipts in. It's almost like the same way Family Dollar.
Mhm.
People use the vouchers and they just send us
Great.
the.
Are things being a little more under control with Family Dollars? Using them for their personal needs?
Yes,
or-
yes,
Okay.
yes. It's tightening up quite a bit. I went there Sunday, and they're saying things are getting a little bit better. So we got some more work to do, but we're getting there. The only thing now, I need to get with the caseworkers, and we need to sit down and we need to discuss what all you can get and what all you can't get with these vouchers. Personal, items and food and clothing. Okay, that's fine. But when you start trying to buy shaving clippers and you're buying lighters
Or perms for your hair?
and all that stuff, or you have men buying feminine products for women, I have a problem with that. So what I told them to do at Family Dollar is, if you see that something happens, you see that, highlight it so we can address it. When the clients come in, they talk to us. Hey, send them right in. Hey, we can't have this. You know, you can't get, just because you have $10 left on your voucher, you can't get 10 lighters. What do you need 10 lighters for? So that's something that we're gonna have to tighten down on our end, and
Yeah.
Family Dollar's helping us out by highlighting these things. So it's up to us to tighten it down on our
Yeah.
end.
Now, they can't buy like candy and chips and if they have that on there.
Yeah, they do.
Actually, they
Yeah,
can.
Oh, they can?
Mhm.
Wow.
Yeah, it came
But we
on-
need
on
to-
the link card.
Right.
Patrick and I were talking about that.
No, I'm
Right.
saying on this card, on,
Mhm.
oh, really?
We need to find a way to limit that, though.
I think candy is one of them that they can't.
Yes,
I
they
know I saw
do.
one
Yes,
girl
they
that
can.
had a whole bunch of candy.
Yes, they can.
If they just have $1 or $2 left, that's
Yep.
what I encourage them to do.
Mm-hmm.
Get a
Buy
pack
the
of gum or get a
because it's
candy bar.
that little blurb on the purchase order.
No, they do it. Yeah, nothing when they did it.
No, I know I saw somebody getting a bunch of candy and stuff,
Mhm.
and I thought, wow, but, okay.
So we still got a ways to go. Still got a ways to go. Any more questions?
No, No, but I will abstain from voting on the bill to the Salvation Army for $190,
Okay.
02392.
Right, so we call the roll, right?
That's correct.
Right.
So I will call the roll. Bender.
Aye.
Aldenseed.
Aye.
Joy Sellers.
Aye.
Patrick Sellers.
Aye.
Motion passed.
All righty, we're on to the supervisor.
Now, I have a
report.
question, Michael, for you. They have to sign this under Nikki's name. Do I put in here that she abstained from that on here?
Yes,
All
abstain
right.
from, as to bill, number 2392 or whatever.
Okay,
the number.
all right, I'm gonna pass this around for you guys to sign.
Okay.
And then, Nikki, I'll just put that in under your name after you've signed it.
All righty, in my correspondence, I'm gonna pass around a letter that will be sent to the landlords about the red flag safe housing thing that we got going on here. And if you can feel at the bottom, our seal is at the bottom of that.
I
So,
like that
Oh, I
seal.
see it, I see
so there it is.
Pass that to Nikki.
Yes,
Yep, you can feel it.
you can feel it, Mike.
Feel the seal.
That's right.
That is really
Before
cool.
you sign it.
Okay.
In the letter, I put the statute where we are prohibited to pay general assistance for shelters that are in violation are in code violations. So the landlords will get this, and so they will know that their properties are condemned or have a lot of city violations or violation of city codes, then we will not be able to pay for those for the clients to live there.
How do we guarantee that they are actually looking at this, knowing that we can't pay rent in certain instances? Would you have them maybe return a signature?
No,
No?
no.
Saying that they understand?
Well, no. They,
Not to some of them.
well,
And then they shouldn't be landlords.
I was just.
Because not only is just
Intelligence does not
township,
make a landlord.
yeah, but I'm just saying, not only is township just doing this, the city,
yes, it
all
is.
the way across the board is doing it.
Yeah, we're all across the board.
So if they find homes where inspectors are going in, they're shutting them down, telling people gotta come out of them. So they know.
They know, but do they respect it?
No, they don't.
They will.
That's why you have
If
to
you
send
They
it.
will.
deny payment, they gonna respect
Yeah.
it.
They will. Today is the 5th.
So do we have to have somebody actually go in to these ones in question and update like once a year? Make sure that they do inspections on these properties once a year?
That's gonna be part of
Well,
the city's plan.
That's
Well-
what I mean.
Yeah.
I don't mean us
Yeah.
personally.
Well, my thing is this: if your property falls on the red flag list, it's up to you to get it off. It's up to you to communicate with us that it is off.
The only way to get off of the red flag list is it has to pass the city code
Have to pass
inspection.
city code inspection.
And plus, I thought that we have a inspector, so if someone is going to look at a property to rent or to go in and it was on the red flag before, the inspector go in there and say, it's still on the red flag. So, you know,
Now, the one that I presented to you several weeks back
Mhm.
is on that red flag.
Yes, it
list.
is.
The city put it in for
And
violations.
and if you notice,
So it
that
won't- that won't have a check now.
no, that property will not be on our claims and demands. So,
Can I give this to Nikki? That's another one she's gotta sign.
When
So-
were you thinking of sending this out?
I plan on having it sent out before the end of the week.
It's the second claims and demands.
Different one.
Yeah.
So I gotta get all of our landlords' addresses and put them in the mail and get it to them.
So will you like have a packet for your landlords and this would be included in it?
That's my
So that they
plan.
understand if they let their property get in disrepair, this is what the outcome will be?
Yes.
That's kind of what I was trying to push, you know, so there's no questions. Oh, but I didn't know about this.
Right, right.
The next thing down was client contracts, and that was my fault. You should have said sponsors contracts. That's my fault, because I put client contracts. It's supposed to be
Oh, it should
sponsored
be
contracts. This is for the I Earned It program. This is the, well, with the approval of our attorney, I wrote some, couple of things. I should have made copies, but I didn't, guys, I'm sorry. That's spelling out the responsibilities on Township's end, what we're gonna do, and what we're expecting from our sponsors, people who are gonna house our clients to do community work for them. So that pretty much spells everything out. After I let Mike take a look, and
You know, an attorney wants to add like 16 more pages.
I know, I know.
Keep it simple,
Yeah,
Mike, keep it
yeah,
simple.
disclaimer.
Right.
So that's just,
Sweet.
that's just my thoughts.
You do that.
Yeah, oh, that's just my
Put
thoughts.
the legal ease in.
Yes. So, while that's going around, one more quick thing. We got 2 SSI payments back from, I'll let you see those, you can pass those around. I will,
And this comes from the state of Illinois? These 2 SSI payments?
yeah, yeah.
Okay.
Good. I'd like to get one out.
Here are,
I bet you would.
Here are
You'd never come back from Hawaii.
our distribution sheets for the tax year distribution. Here you go, Mike. I got a lot of stuff I'm passing around, but I know, I'm sorry. But it's good information. So that's where the money is being dispersed. I said in the last meeting I would have this available for you guys. So, there it is.
I just wanted to get the amounts.
See, where's the railroad pay taxes for?
I guess, what are you looking at now?
The settlement sheet?
The railroad.
It's also on page 1, current year
Taxes
taxes paid,
paid.
second one.
Up in the right-hand corner.
Yeah, railroad.
Right up, Cindy.
Some of the railroad property is valued by the state, and apparently some of it is not. So there either hasn't been a change in ownership, it's similar to other properties that become exempt but aren't exempt, or this actually could be an improvement only on a piece of railroad property. That would probably be my best guess.
Don't worry, I am right
And
now.
don't we get anything for mobile homes?
This is why.
Mobile
This
homes
is-
in the state of Illinois, they tried to make them become taxable in the sense, you get a wheel tax on mobile homes. You
Yeah,
don't get
television.
an
So put that
assessment
under
like you
the,
do on the rest
put that
of the
under
properties in
correspondence
town.
as well as my,
I'm kind
smart
of surprised,
rental.
unless maybe their
Okay,
due
please.
date might be different. That might be part
Oh,
of
that
it
is,
too.
yeah, that
Their
is
due
true.
date
Theirs
may
is
not be the
different.
same as the rest for
It's
residential and commercial.
Smart
rentals.
renters.
It's
Yeah,
a
theirs
different
is
date.
different, yeah.
So that's
It
probably
is.
why you're not seeing anything right
Okay.
now.
So this- So to clarify for my notes.
yes.
The settlement sheet, this is what we get from our taxing body, our portion of the taxes? Okay.
Trustees, I want to share with you guys the Turning Point Adult Literacy Program. And, oh, yeah. We are still, I'll be meeting with Mrs. Sherry Teal. She is a adult literacy specialist, and she and I are going to discuss how she can help us out with this program. Literacy is a major issue in our city, especially among adults. If we can help people get more proficient in reading, we can help them become more employable. So the first step in getting employment here is not bringing jobs here, it's getting our community employment ready. And this is a step in the right direction. So.
With some of with this, when are you looking to kind of get things, some of this stuff on rolling?
I'm looking to get a lot of these stuff rolling as soon as possible, but we've come into a few stumbling blocks here that we have to get some things taken care of before we can actually, get a whole lot of things going. The red flag, that's rolling now. That's underway now. The Audit program is just getting approval from our attorney for the contracts, and then we can get that rolling. The Turning Point program, I would like to have that up and running probably by early October for sure. So in the winter months when there's not a lot of work to be done outside, we can get people into the literacy program.
Have you contacted them about lowering the rent you're paying? Have they been contacted yet?
Not yet. That's my next, and I'll have a letter. I have a letter for you all, and I will send it to you all. You guys can read over the letter. If I get your approval, I'll send the letter out. That was what I forgot to put in this packet.
Is that going to go out with your red flag list?
Yes,
that letter?
yes.
Okay.
So I'll get that to you all. Another program to help out with red flag.
Oh, I'm
Go
sorry.
ahead, please.
On what Nikki said with lowering the rent, so it's already been approved that we can lower it, right?
Oh, yeah.
Is that what, okay. So now we're just saying we're getting
Yep.
ready to tell, okay.
Mhm, we'll notify
That's
them.
okay.
So yeah. Tagging along with the red flag, we're going to implement a smart renters program. This program is designed to help renters make good choices when renting properties. We'll have an informational brochure together to give to our clients. So when they go to see properties, inside this brochure we'll have city code violations. So you can look and see. If you see that the roof is leaking, don't rent the property because we're not going to pay for it. The more we can educate our clients about rental properties, the better off it'll be for us, better off it'll be for the city. So that's what the Smart Renters program is about, and that's the brochure.
Yeah, he gave it to me to look at. It's a rough draft. Looks good. It's going to educate the renter.
So
What about some of these landlords that make people pay for background checks?
Say what?
what?
Landlords that make tenants, potential
You can just
tenants
imagine
pay
who they are.
for background checks.
Oh, well, we're not doing that.
Well, that's been.
They do.
Well, then
So
we're
how
not-
long
we're
have
not
they
gonna
been doing
rent
that
it.
Three
You
or
don't
4
rent it.
years ago.
Oh, yeah, I'm not
Yeah,
paying,
we
I'm
do
not
that.
paying for a background check. Your place.
So did they get that paid for via the township?
I don't think so, but landlords have the right to do a background check, and background checks cost money, and,
I didn't know that was going on.
oh, yeah,
Yeah.
for
But I-
years.
Yeah.
Wow.
Yeah, I mean, R&R, or not R&R, Jilly.
Yeah, but she said she pays for hers.
Okay.
Now, I know when, at the landlord meetings that we go to, she says she pays for hers. But a lot of them say, that's why some of them get some of the clients that they get, because they don't wanna pay for the background checks.
Background checks. Okay.
You know, so
I
it's,
didn't know that was going on. I wanted
For
to.
several years.
Wow. I want to make sure I keep you all abreast on the programs that we would like to implement, because I want your your input. If you guys hear something or see something that we need to tighten up, you know, let me know so we can work on tightening it up.
Are we also, I know we had talked about early on, when the clients come in, they're, with the Turning Point, program, will they also, like computer skills? I mean, we had talked about, you know, something like that, giving them some computer skills so they know how to, when they come in, put in their own information. So that's less work on the caseworker, you know, things like that.
That could be implemented into the Turning Point program. I mean, I contacted Highland College about potentially getting some computers donated to us. Ms. Kanowski said that'd probably be out of the question because what they would do is they would just transfer the computers from Highland to their GED.
Oh.
You know.
Call MetLife. That's what I
Yeah.
thought. We got them from MetLife.
I can find out.
You can
It's
ask.
Denise Davis, call her, because she does a lot of,
Okay.
Who am I gonna
See,
ask?
that's what I want to
Denise
do.
Your
Davis.
supervisor.
Yeah, I didn't think of Carol.
Yeah. She would know
Okay.
who to.
I'll call her tomorrow.
She does a lot
Call
of stuff.
Carol, and I can't think of her last name. She's got a big job upstairs.
Good. Where's mine? Where am I? Okay. I lost mine.
And we're on the expenditure budget
Okay.
revenue.
Okay. I think it's in the, you guys have copies of the expenditure and budget revenues, right? So you guys can take a look at that.
Which one is that? Is that part of the
I don't-
claims and demands?
Mhm.
I didn't get,
I put all that
Email.
together.
oh,
I didn't get it, so,
No?
nope,
email, I know I didn't.
I didn't get it.
I don't know how to work, I don't know how to work my printer.
It's called
I do not mess with it.
Friends.
I do not want to hear nobody's mouth.
Tell them.
Huh?
Tell them.
All right, I don't want to hear nobody's mouth, so
George,
I
you
don't
didn't
mess.
pick no printer up in Hawaii? I thought you
Let's
were
see here.
gonna-
No, I wanted to look at it
That's
while I
not
was
it.
relaxing, so.
Okay, what I'll have to
I
do
did
is,
that,
I'll
but
have to
as far
make
as
some
printing,
copies of
I
it,
think I don't
because
do
I
it.
thought everybody
Cause
had
it's
it.
too much. So he's got
Sorry,
it
guys.
hooked up some crazy way, and I ain't messing with it.
So the expenditure, the budget,
I think I mine right here.
you do?
No
No,
Okay.
Mike, are we talking about the expenditure to budget report and revenue account summary?
Yes.
Do you have those?
Right there, yeah, printed those out today.
Well, I didn't get them.
Yeah, Barb didn't get them.
I didn't get the minutes, so.
You didn't get the minutes?
Well, you did the minutes.
Okay, okay, here's the expenditure, the budget report.
There's one for May and one for June.
Yep, one for May and one for June. Should I make copies of this real quick? I'll make some copies real fast. Be right back, guys. I thought everybody had this information.
Why did they change so from June to from May to June?
What are you looking at? Give me one minute.
Oh, here, no, I see now. Yeah. I'm looking at,
For the revenues, which one are you?
no, I'm looking at
Expenditures?
percentages that are left, what's left in the budget. For that legal services,
We're at
on page 1,
30.47.
there's only 48.51% left. Under supervisors.
That's
Yeah.
consultants, 48.5, and we have 30.47.
Yeah. Maintenance equipment, 26. I don't know what's miscellaneous under supervisors, only 37.11. Risk management contributions, is that mostly all paid for the year at one time, do you know? Cause yours is down too. Yours is actually 6.85 on page 4.
I looked at that, and when I looked at
The
this,
supervisor 16.32. That's what I was wondering, if it's up front.
Mhm. Yeah, I looked at that also.
Come on.
My office is higher because of the outside work that we do.
Oh, okay.
The staff has to do outside. So actually, the computation is a higher dollar than it is for some of these.
Is yours, Joy?
Yes.
Is that other sheet that you guys signed for the budget thing?
The two-page one?
Yeah, where is that? Did you get it, Nikki?
Yeah, I signed it. You signed it, yeah. Where'd you
Where
get
is
it?
it?
It's down here on Patrick's right here.
Oh. Thank you.
She did have the book there, didn't
She doesn't want to be working much either.
I? Really?
But that's my day looking for files. That's the only way to do it. It's probably ringing.
Oh, that's at home.
I hope.
Mike's
I heard
got a
all
new
about
doggy.
your vacation going on today at Christmas.
Oh, Christmas.
Yeah.
We do that every year with that group. We
That's
see it
what
go
Sue
for the last
said,
3
yeah.
years.
She was telling me she's gonna be gone those weeks right before Christmas. I said, there's no way.
Cheapest week of the year to travel.
Is it really?
That's why they go.
That's why they go that?
Occasionally, he's down on the building. I had lunch with him when Dr. Charlie was doing okay, doing better than I am. It's more energy than I have. Probably out golfing, I'm always in my office working, he's probably doing fine. Yeah. I remember the name, my mind's gone. I don't remember all the people I used to know. I have a photographic memory for what I really.
All right.
Never been good at names and faces.
I'm good at faces, I'm just not good at names.
Yeah.
Huh? Yeah, but
All right.
I'm not good at names.
Yes.
Goodness.
Yeah, I know.
Hot off the press?
Mm-hmm, hot off the press.
Learning how to use that copy.
Oh yeah, learning good. All righty, this is the expenditure of the budget. No, there's no new one.
Huh?
There's no new one.
Oh, I thought it was one that was.
And you need this one for, hold on a second.
Oh.
That's for, I'm gonna ask you.
It's in the same thing. Oh,
That's
this for
it.
June, I got it.
Okay,
Okay.
here's May and June for you.
Thank you.
You're welcome. Here's May and June.
I have it.
You got it?
Mhm.
Okay.
I have it.
Yeah,
Everybody got it?
hang on.
Just that
Me
side.
too. Us too.
Come on, man.
Patrick, I was talking about on the first page,
Yes, ma'am.
on consultants.
Mm-hmm.
Percentage remaining is 48%. Legal services, so you've only got 30%. Maintenance equipment is only 26.
We had May or June.
Let's see, what's our one?
Okay,
Is it June, Nikki?
Yeah, on June's, yeah.
I know.
And then I was, just asked Cindy about, on page 4, both of yours, the risk management contributions, you only have 16.32% left. She has 6.85. Do you pay that up front? Is that why that's all that's
The,
left on risk management?
risk management, that's for the,
That's the insurance.
Township
Yes.
management
Mhm.
foundation
It's
fees.
paid up here.
uh-huh.
Okay, so that's, are you concerned about these others that are so low on the first page? Consultants, legal?
A little bit. I'm a little bit concerned. I know a lot of my consultant was spent before I even took office.
Yeah, that's true.
So,
What's miscellaneous under the supervisor?
miscellaneous.
62%'s already been used.
I don't think I've touch miscellaneous. Let's see here where we at. How far down am I?
Right here.
Yeah,
Oh.
yeah, miscellaneous.
Town supervisor
Yeah, about
miscellaneous.
halfway down to town supervisor miscellaneous.
100 year to date. I don't know. I'll check into that one. See what that miscellaneous one
Well,
is
even,
real
even
quick.
if you look at that one, Nick, in May, he was at 56% used, and he wasn't even here yet. So you wonder, I mean, you're talking the difference of 6%.
Oh, yeah, I see.
He's expended 6%
Yeah.
out of that 62. The rest of it was done
Yeah,
prior
I see,
to.
yeah, I see that
Yeah,
now.
but it was 44.39, yeah.
Yeah.
I don't know. I'll check and look and see what all transpired even prior.
When are you guys gonna, or when are you looking into consolidating some of these, things that we, like we have, 2 different postages. Two different, Comcast, 2 different telephone, 2 different internets. So when is all that going to, are we,
Well, we're not in the same
Not in
building.
the
I
same
know
building.
that, so that's what I'm saying.
Yeah, that's
Is
a
that
huge
going to
portion.
be-
Yeah.
Is that ever going to,
Maybe under one roof.
Maybe under one roof someday.
And don't they go by
because
the
that's
service
a lot of
average?
money when you look
Mhm.
at, rent and,
For sure.
Yeah.
2 different telephones and internet service
Mhm.
ain't cheap and, that also can be money saved.
Mhm.
So that's something we need to look into.
Mhm. Got a mess going. Keep that. Get all of this. This on top.
Okay, the next thing is revenue.
I'm trying to find it, Bobby. 1 second. Right here. Revenue. This was for May, right?
Yeah, that's what's next on the agenda.
I know.
Did you get a revenue monthly report? Did you get the revenue?
Well, there you go. You're welcome.
So it's clear for real estate taxes, remember our taxpayers pay them usually in June and September. So
Yeah.
we probably wouldn't get the first distribution but sometime in July at the earliest, because we're still paying them in June.
Like, that's what he presented tonight. It looks like we have 500 and some thousand out of the 900 and some thousand we had requested.
I know it's like 528 out of.
Yeah, 529, 413 is what we've received so far out of the tax dollars.
But that's not reflected in here yet. Because if you look at,
Okay.
on the monthly revenue report for June, the first line on the property tax, month activity, they expected to
Sure.
receive 90,000 and received 0.
Right.
So July was probably the first time we'll receive actually.
Mhm.
You'll get a big chunk in July and then another big chunk in late September or early October. in the 024102 or 0141102 replacement taxes, that's corporate personal property replacement tax. Back in the 70s, corporations used to pay a tax based on the value of their personal property, and when they abolished that, they created this tax to soften the blow to local governments who were going to lose all that revenue. So I'm not sure exactly when that will come in, but that's what that means when it says replacement tax. We don't have tax personal property in Illinois anymore.
I just don't want you guys to go out and spend the interest you're making on your money.
Yeah, I noticed that too.
$1.33.
Yeah.
Thank you.
I saw the
Yeah.
same thing.
Man.
And one of them buy a
Wow.
candy bar.
Wow.
Not good.
That sucks.
Thinking you put your money under your pillow and.
Yeah.
In the
Tooth
wall.
fairy will give you more money.
Put it in the wall.
Correct.
Yeah, they up to $5.
Yeah.
Basically, it shows no revenue. No.
No, it's just for information purposes.
Okay.
Right. So next on the agenda is the assessor's report.
Nothing to tell you other than a little bit of good news. Only the loss will be a little bit less. We did get the state's 3-year average sales ratio study, and they took into account the 10.6 million we lost last year and adjusted our 3-year average. So instead of losing 22 million this year, we're only gonna lose 11. So I think that's
Wow,
a good.
that's
good.
That's good, so, you
Yeah.
know, on that note, that's not our dollars, that's approximately, I think we computed, we lost about 31,000 due to the reduction last year. So you're probably gonna be somewhere around the same, 33,000 for Township loss because of that. Other than that, we're winding down 2013, and hopefully we'll have the books closed by the end of this month, as the county assessment office wants to publish right after the second installment. So it's nothing like, here's your check, and oh, by the way, here comes your new assessment. That's pretty much how it's gonna be this year on the heels, but it'll be a reduction for most property owners. That's all I have.
So when we have a loss like that on Township, what happens?
We cut.
Yeah,
too.
Yeah, so we cut, but who do we cut? You know, what do we cut? How do we, you know, I guess
that'll be
that's my
part of
question.
next year's budget.
Okay.
So, and then it'll depend on the levy and the percentage that we can actually receive because of being capped.
Now, when we say we cut, and I know we've cut different, you know, things in the budget and whatever, but we can't cut clients, right?
You can't cut assistance.
No.
Right.
No.
So we have to cut, it might be,
Reducing the grant allotment. Things
Okay.
like from 275 to 245, that's gonna
Okay.
help.
okay.
Yeah, the I Earned It program, that's gonna help, because a lot of people aren't gonna wanna do that.
Okay.
So can we cut people? No, we can't, because we're bound by state statute to help anyone who is eligible to receive our assistance. But reducing the grant allotments and the work and training program, which some people may not want to do. They may say, hey, it's just, I should go out and find me a job, I don't want to do this. And they may get off of township assistance. So that's a possibility as well, so.
Because I guess I know you can't, it says by law you can't cut anybody, but if you don't have any money, how do you, I guess, you know, I'm trying to figure that out. If you don't have the money to help, how are you going to,
Can I tell you something?
where are you going to keep getting it from?
What I've learned by reading the township manuals and stuff and some of the laws. Even if we are running out of money, we still got administer general assistance. That's our main purpose. That's our main focus. That's what we are here to do. You got to find a way to do it. Yep, loans.
No.
Yep. And since there's
Some
no,
townships have just gone belly up or they're closed and the county has to take
Yep.
over.
since there's no more receivership in Illinois, the
Right.
state's not going to come in and give us any money to bail us out. If we go belly up, we've gone belly up.
Who put that law in?
Well, they used to have receiverships where the state
Mhm.
would take over and give you the money then.
Yep.
But that's
That's
no
what I'm
longer.
saying.
That's because they don't
So
have
you're
any
still
money.
relying on taxpayers to come in and
That's our
help
only
with this?
source.
That's our only source of
That's
income.
it.
Right,
That's our
other than
source.
SSI reimbursements.
Yes.
Yeah.
Yeah.
Which is your priority.
And
Yes.
hopefully grants, when
Mhm.
we get the 501c.
Yeah, 501c3.
4, whichever number that is in place. So,
So, yeah.
Okay.
Trustees report.
No, I'm happy with the programs that you have in place that you want to start. I think it's really great. I really would like to see, I guess, if we are a, how do I want to say it? You know, if Township and the Assessor are one entity, I think that paying, you know, we're talking about making cuts and we don't have it and we getting cut $11 million or, you know, all these different, it makes no sense that we're spending money foolishly on some of this stuff, that it makes no sense to me. So I guess that's my only thing is, I think that we need to get where we're all together and we're not spending extra money on lights, gas, water, rent, cable, and all that in other buildings. I think we need to be together to
Consolidate.
cut back on some of that money, so then we do have more money to do some of the programs we want to do and help people become independent and you know, are able to take care of themselves. And I think that's what, you know, our main focus of running and getting elected, that's what we wanted to do. We wanted to help the people to be, you know, in Freeport to be a stronger community and, you know, not relying solely on, you know, taxpayers to give up more to help people that really have less, but these people are wanting to do better. And I think that we're wasting a lot of money on, you know, these two different buildings. And I think that we need to do something to get that in order. That's just me. I don't know what everybody else thinks.
I agree with what you say. It was always meant for both offices to be together.
Mhm.
We were never supposed to be separated. So, yeah, I believe, yeah, we can save over $10,000 a year.
Yeah, that's a lot.
Just for her rent,
Yeah.
which we're
And that's
probably
just
gonna
rent.
need this next year.
Yeah.
So I think that's something we need to work on. Also, I tell you that we hired a gentleman today who's been on Township, and he'll be coming to work under work experience, starting Monday. If he comes in with all the paperwork tomorrow morning, he can start Monday morning.
Experience works?
Mm-hmm, yeah.
That's a good program.
So he'll be
Good.
coming to work there. She was impressed with him.
Now, who is that
Good.
through Experience Works?
It's a state program.
Oh, okay.
Program for people 55 and over,
Oh, okay.
trying to retrain for a job.
Mhm, okay.
That's good.
Don't they actually help with going back to college?
No, work experience does it.
What is that? Oh, Partners for Employment.
Yeah. Yeah, work experience is just actually working. For us,
Okay,
he'll
well,
That's
work,
good.
he'll work 21 hours a week, which he was happy with. And sometimes
What's the
it
name
goes
of
up
that
to
program that
35.
you
Work
said?
experience.
It's called Work Experience?
Mhm.
Okay,
Well, we had two good things today.
That's good.
good. Well, tell me it's good news.
That's right.
Go get it, Barb.
Other business. I don't have anything else. Public comments. Yes.
Okay, I wasn't gonna say anything until I heard you all talking,
You
and
have to go to-
it brought up a few
Chair.
things for me. I'm sorry. It brought up a few things.
Oh, I need you, can I have your name and your address, please?
My name is Barb Kennison, 2556 Stevenson Circle.
Thank you.
when you're talking about the property violations and you're gonna send a letter out to the landlords, and there is no excuse if they say, well, they didn't get it, how about running a legal ad in the paper as a backup? And if somebody hasn't gotten that letter, that they can ask township offices for it. That way they have no excuse. As for the utility deposits, I don't know how much you could work with the electrical company or the gas company, but with Freeport Water and Sewer, when I heard about the deposit for that, I would think that maybe Township might have the idea of maybe getting together with the Water and Sewer Department as a revolving account. That way, if one of the residents moves to like housing or gets an apartment where there's no utilities, that it would revolve back into the Township account.
Instead of they getting the check.
Right.
Or deposit.
Right.
Yeah, that's something too.
I'm
I
a
like
type.
that.
Cause I got
Yes.
a deposit check not too long ago, and I
Mhm.
was happy to get that.
And I would find out if there's any way you can do that with electrical
Yeah.
or NICOR.
Mhm.
See if that's a possibility, because you don't want to keep putting money into their hands.
Right.
If they're gonna leave, it's gonna go into their hands
Mhm.
when they didn't earn it.
And it
Right.
just stays there, you know.
Right, it will
And
be a
we didn't-
revolving
yeah.
account, you'll also be earning interest on the money that they keep in the account.
That's a good idea.
It's a great idea. I like
Boy, you were
that.
really
You
thinking.
rock, Barb.
Yes, you do.
I got a lot of rocks. That's it.
Thank you.
I like that, thank
I like
you.
that. Nice. Any other, yes.
Marty Michelle, Superintendent Veterans Assistance Commission of Stevenson County. Just clarification on the experience works gentleman, that's a veteran and not from the township. I think if you're talking about the one, it's a veteran from the.
Oh, okay, well, I talked to Brian. That was how I got him.
Oh,
That's
yeah.
why I thought he was township.
Yeah, well.
Nice gentleman.
I'll
either way
correct
go.
that in my minutes.
Yes, go ahead, in your minutes. Any other public comments? No? Okay. It is now time to go into executive session to discuss probable or imminent litigation. I need a motion to go into executive session.
I move that we go into executive session to discuss probable or imminent litigation for 5 ILCS 120/2C11.
I'll second.
Motion by Linda, second by Sellers.
Want a roll call
Alright.
vote?
Yes, take a roll call vote, please.
Trustee Sellers?
Aye.
Trustee Bender?
Aye.
Trustee Altenseek? Aye. Supervisor Sellers?
Aye.
Okay.